Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, part one of two, because I want the hedge funds, the REITs, the banks, the offshore trust corporations to buy real estate in the United States. Some of you may be going, oh my God, what is he talking about? Well, here's what I'm talking about, ladies and gentlemen. I'm talking about when I said, Eric says housing prices will go down 50 to 60%. People were saying, oh, what about these hedge funds? What about all these corporations? They're going to be buying houses. Therefore, they're not going to go down. All right. I have something for you, ladies and gentlemen, because remember the mantra here is going to be buy a home in 2023 or 2024. And there's reasons why, because the Fed, they're going to increase the interest rate this month. Some people are going to have to get an 8% mortgage starting next month. And then after that, they're going to do it again the first quarter. So they'll be well into 8.5 to 9% by the time the second quarter comes. And then by summer, things should already be in place where it's going to be a buyer's market. It's already started that way. And this intro is longer than usual, but that's okay because there's going to be a part two. Because, of course, we deal in facts around here. And welcome. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen. I want to thank you once again for being here. Please share the videos. You never know who will hear this information and be able to use it. You never know who's not looking for the information, but then it comes across their desk and they're like, hey, wait a minute, I was thinking about buying a home this month. There you go. Or next month, or the month after that. But no, we're going to wait. Here's the mantra here again, buy a home 2023 after the first half. And then if you really want to get crazy, wait at least another year from now because it should be a buyer's market. And there's going to be a reason. I'm going to illustrate why it's going to be a buyer's market, and it's going to be glorious. So here we go, ladies and gentlemen. First, we got to get on the Stop Struggling Now YouTube channel page, the podcast channel, because you guys, this is called Stop Struggling Now for a reason to help you. And notice over here, the members of the channel are down here. They just started this. Thank you, channel members. That's right. Thank you, channel members. And they show a few of their icons and faces. You can join the channel with the join button. This is different than subscribe. And under the community tab, they receive 1 or 2 videos per month. They receive special messages specifically for them. They also receive special discounts on the merchandise and gear as well. They receive other information that you may not receive. They have special videos. And on Wednesday night live streams, guess what else? Members of the channel can only be in the chat room. Everybody can watch. And then members of the channel can join me on any live stream I ever do and discuss anything they want to. Now, let's get into this a little bit further, shall we? Because I'm a little bit excited. Because, again, against all odds, here's what it looks like December 2nd. 700 to 719 credit score. 7.467. The Federal Reserve is going to raise it in this month, probably another 0.5, because that's what Wall Street can deal with. Go figure. So now you see why we're going to be at around 8% quickly here. And if you want to buy a $300,000 house, well, let's just call it what it is. Where is my mortgage calculator? $383,000 house is going to cost you $2,662 a month. Include taxes and fees, $3,300, ladies and gentlemen. That means you must make $120,000 a year as household income and not have any debt. As soon as you have debt, you have to create a higher cost. That means $150,000, $160,000 a year. Do you know how many people qualify for that? I'll just put it this way. There's more homes for sale than people that can qualify for a $383,000, or in this case, $478,000 house. So you see, prices have to come down. And why would you say that? It's because this is the numbers, ladies and gentlemen. In 2022, they're estimating a little under 6 million homes are going to be sold. 2021, 6 million were sold. 2020, 5 million was sold. 5.64 to be exact. Now, when you think about it, this is why I always say let the hedge funds, let the REITs, let all these stock market guys spend their money and have their money locked up in a single family home. And how dare they buy a condo? But nonetheless, let them lock up their money in these homes, because that means they're not buying their stocks. That means they're not trying to go out here and bribe people. All that money, let them lock it up. Let them buy these homes, because they don't have enough money to buy 7 million homes, 4 million homes, 2 million homes. Who's going to fund that? Because you guys have to think about this. You guys are here in the SSN Nation. We don't call a house an asset. Some of you are still new here, maybe going, what's he saying? Everybody says buy a house, get an asset. Ladies and gentlemen, shall I show you this again? $3,300 a month for a house that costs $478,000. Does that sound like an asset to you? You're paying it out of your pocket. How is that an asset? You don't pay for assets. Assets pay you. Now, here's the thing. What if you have other passive income coming in and that pays for the house? Now that's a different story. And that's why we've always talked about this for 4 years. Get your streams of revenue, get your passive income, get your multiple business started, because then you'll have the passive profit coming in to pay for where you live. Now that then turns into an asset. There's a distinction, ladies and gentlemen. So I just want to show you again. They can't buy enough homes. That's why I want them to buy as many of the homes as they can right now. Oh no, maybe even next month. It doesn't matter. You know why it doesn't matter to you? Because the home prices are still too high. They're going to drop even further. And that's the beauty of this. They're going to buy something in the neighborhood for, let's just call it $425,000. And in about 7 months, it's going to be worth $300,000. I love it. And guess what else? They'll be out of bullets. Understand what I'm saying? Out of cash, because after they spend their first few billion, they're not going to want to spend more billions when they don't know how far down the housing market will go. So they cannot prop it up like it's a stock, ladies and gentlemen. But I'm going to show you what they did do to you, whoever bought in 2021 and early 2022. We're going to get into that. And this is why it's going to be a 2-part series. And this is also why down below in the description, I have the Smart Credit tool, the smartcredit.com program software for you to make sure that you get your credit and keep it and maintain your credit properly at its best. Because this time next year, starting 8-9 months from now, it's on. And therefore, when these prices come falling and tumbling down, you want to be able to pick them up without a hitch. Whether it's one or many, without a hitch. You want your credit to be best as it can be. So use that link. They have a free version. But again, you want to use the paid version, because that way you have much more involvement with your score, because you can send letters. It helps you send letters out to the bureaus and everything. This right here on the screen. New homes. Look at this. Starts 1 million every year. 1 million new homes every year. Well, this is going to come down because these developers can't get their money. So what happens? The REITs, the hedge funds, they're coming out here saying, you know what, we'll buy your development from you. So what? Let them have it. They weren't built anyhow, and they just wasted more bullets. So when housing prices drop another 20, 30%, they've spent their billions. All right. Hopefully you guys understand what I'm saying. In fact, make a comment down below if you understand or disagree about what I'm saying. Now I'm about to give you a little illustration. Let's just call it Eric's whiteboard because I've never done a whiteboard. Really, I was thinking about it today. I was going to do a whiteboard for this occasion, but I didn't. So here's my whiteboard for you guys. Notice, I don't like how this is, but we'll get it straight. Notice up at the top how banks, hedge funds, REITs, and you, that's right, you, help real estate prices increase. Some of you, that is. Now, let's get it straight. I'm going to act just like this is, you can call this 2005, 4, you can call this 2019, 2020. Either way, this example will hold the same. Because as you know, in 2004, the house might have been $110,000. But by the time 2006 came, that house was worth like $350,000. The same thing happened here. A house that was worth $150,000, $200,000 in 2019 somehow is worth $450,000, $500,000 in 2022. All right, so here we go. Look at Eric's whiteboard, please. Winners, everybody who bought in 2019, 2018, 17, 16, 15, 14, 13, 12, 11. Winners. Now, the reason why you're winners is because you locked in a lower price. You were also able to refi and get a lower interest rate into the 2.8, 2.5, 3.1s. So you're paying $600, $700, $1,000 a month maximum for this type of $200,000 house, 250. Now, winners, that's why I call it the winners. But then this is 2019. Now it's 2005. Now all of a sudden it's FOMO. Low mortgage interest rates, they're coming down. All of a sudden somebody says, hey, time to step on the gas and buy homes. Meanwhile, someone has been buying homes because they have a lower interest rates than Citizens. That someone, banks, hedge funds, REITs. Why? Because they can borrow money from the Federal Reserve. When they borrow money from the Federal Reserve, you might have a 3% interest rate. Well, guess what they had? 0.5, interest only, for 5, 10 years, in some cases 15 if you're one of the big boys. You start telling me what would happen in our mortgage example over here if all of a sudden your interest rate was 0.5. And not only that, this is with a mortgage, taxes and fees included. Take out the taxes and fees. Now, this doesn't have a breakdown on the interest, but what if it was interest only? $500 a month, $250 a month. Does that sound like you're gonna lose? Now you understand why they can buy thousands of units. It's on a loan, it's on a paper. You getting it yet, ladies and gentlemen? All right, let's go back to the whiteboard. And let me know what you think about Eric's whiteboard anyhow. All right, the SSN Nation whiteboard is what I'm going to call this. Now, here's the other thing that happens. They get to come in and buy up house number 1 for $300,000, house number 2 for $300,000, number 3, 4. They buy 4 houses for $300,000, but don't think that it's just 4 houses. Times it by 100. So they bought 400 houses for $300,000. So what do? Somebody has a house for sale. They're saying, hey, this is a great time to buy. You have people coming out of the woodwork just to buy a home because home prices are skyrocketing. So you put in a bid for $300,000 and all of a sudden your realtor says, oh, I'm sorry, somebody came in and put a higher bid in than you. So then you go, $325, I'll do that. The house is going to be worth $375 and at the end of the year anyhow, no biggie. Then they have a second you That's right, ladies and gentlemen. You're responsible. You have a second you who goes, "Oh man, I love this house. I want to spend 350K." Sold. Guess what just happened, ladies and gentlemen? Those 400 homes that the bank, hedge funds, REITs, have in their coffers already, they each have a value now of $50,000 more. And in simple terms, you might say, Eric, that's no big deal. But yes, that's $1 million worth of equity now, ladies and gentlemen. That's also means those 400, which you'll see later, that could be 4,000 homes. All of a sudden you're like, wait a minute, did he just say 4,000 homes? 10 million? Exactly. Now, what happens? You win bid. You helped out the hedge funds, the REITs, as they put in a higher bid and you shoot your bullet. So one homeowner down, no worries, we win more than they will. They owe 350. Now, notice I added offshore trust accounts here. Now what happens? All of a sudden, that 350, all of a sudden now, because you had more people bidding, the next house is 375. You're buying it. The next house is 400. The next one's 450. All they're doing is just greasing the wheels. They could be bidding against you. Next one, 500. Now think of those 4,000 homes that now have $200,000 in equity, ladies and gentlemen. Not to mention the homes are valued at 500,000 and they have 4,000 of them. Are you getting a picture yet? Now, the other reason I'm going to say you is because you, OCs, us, you're putting your money into REITs, real estate investment trust, and only getting a silly 5% return. Silly, I'll just throw in the stock symbols, MVO. Okay, that's an oil trust. 15% return, but you're going to give your money to a REIT and have it locked up? Okay, you want something a little more simple? How about AGNC? That's a REIT. They're not giving 5%, 6%. They're like 12, 13% on the stock market. But that's not what they're giving them to the people that put into their REITs. Banks, they're giving you 1%, 2%, maybe even now 3% if you're lucky. But you're saying, Eric, banks buy real estate? Yes. So on Eric's whiteboard, or shall I say the SSN Nation whiteboard, look at here. What happens next? That's the question. So I want these guys to hold 4,000 homes. I also want them to buy in these ranges as well, because they have been buying in these ranges as well. So what's happening is here, they have been buying still. Why? Because they're going to do the rent to own, home rent America, where you're going to rent. But you're not, because you're here in the SSN Nation. You can rent, but eventually in about a year, year and a half, you're going to be sitting there saying, oh, it's time for me to buy. And I'm going to show you that in part 2 on why. So they have been buying the whole time. So I just use an illustration. They have all of this equity. They turn around and using that equity, they leverage themselves, get some more loans, derivatives, and buy 3,000 more homes, because they're going to rent them out to you at some ungodly price. Because remember, they might be only paying 2% or 3% loans. They don't have to pay the same 5 times the interest rate. 500,000 times 7.5. Okay, that's going to be 4 G's a month. They don't have to pay that. They might have to only pay 3% interest only. $1,000 a month. $750 a month, whatever. All right? So all I'm saying is for 10 years. So they have a drastically different advantage than you until they don't. And what do I mean by that? I'm going to move off of this. Then they can't help themselves at these prices. Prices borrow against value of homes leverage. They have loans, right? You guys recognize this, I hope. So then what happens? You have some stuff like this. That REIT that Blackstone has, all of a sudden, when prices start going down, that means your leverage has changed. That means you have to change up, put money in, because now that you're leveraged and the price and the value of the asset went down, they're saying, hey, we gave you this loan at 30%. It's not 30% anymore. It's more like 40, 45%. And when you have hundreds of billions of dollars because you have 5 or 6,000 homes, all of a sudden, that means, hey, you need to give us 10 million, $20 million, please. Otherwise, we're going to have to take those homes from you. They're like, no, 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 here's the money. So what happens? Blackstone limits investor withdrawals. Oh, yes, Blackstone, ladies and gentlemen, they have partnerships. They're a real estate investment trust. Wonder why you can't get your withdrawals. Kind of strange. Not. Okay, I'm going to make this short, but listen to this BlackRock nonsense. I talked about this about 4 months ago where BlackRock said, we're not buying homes. Here it is. Let's just make this perfectly clear. BlackRock is not buying individual houses in the U.S. You know why? Because they're not dumbasses. But they are dumbasses because you know what they do? They actually fund these companies. They're a debt facility. They give loans to these companies. Now, here's the thing. Below are facts on how we do participate in the U.S. real estate market. Like I was saying, combined, we are investing approximately $120 billion in the U.S. real estate market on behalf of our clients. Do you understand what I was saying, ladies and gentlemen? 120 billion. They're taking your money in. You're giving your money to BlackRock. Your 401k is giving money to the BlackRock. You're an investor potentially in BlackRock stock. You're giving your money to them. They're out here buying up residential homes. So everybody who's upset about residential home buying by these hedge funds, you might as well turn the mirror around and look at yourself. Because of you giving them $10 trillion under management is BlackRock, by the way. Trillion, if I said million. 10 trillion under management. You aren't the only ones putting money in. Don't get it wrong. You have Vanguard Group. Oh, did I say Vanguard Group? The same little ETF funds that Vanguard Group have that you put your money into, that you buy their stocks? Yes, ladies and gentlemen, your money is being used to buy residential properties. Now are you understanding why you should never engage in FOMO when you're buying a liability? A house. It breaks down. It doesn't stay the same year after year after year. It just costs you more money. All right? So I had to let you see this so you can stop having those visions of grandeurs because it's real out here in the field. All right? And I'm going to show you this right here. This is funny as hell. This is July 2022. This right here was earlier this year. I don't know if I have the date on it. Let's see. I don't have a date. But this was earlier this year that they came out with this announcement about BlackRock 2022. But look at this, July 2022. BlackRock, world's largest asset manager, loses a record 1.7 trillion in 1 year. So now do you think you guys are being fed the wrong information? Do you really think these guys are going to be gung-ho to go out here and go and buy another and then fund where somebody's going to say, hey, I know, we're going to go buy another 1,000, 2,000, 3,000, 5,000 homes or apartment complexes. Can you give us a few billion? That's your money, ladies and gentlemen, which is why they grayed it out up here. Wall Street giant BlackRock chalked up another record by losing the largest amount of client money by a single firm over a 6-month period ever. 1.7 trillion. One funny thing, what happened at the start of 2022? What's been happening? Home prices start dropping? I think so. That's part of something. There's other things as well, but that's kind of part of it. Now, there's a correlation with black rock and black stone. But let's get into here's your favorite ones where people go, Eric, they're going to be spending all this money to buy single family homes. Again, not. Blackstone unit acquiring 7 Atlanta apartment communities. They just borrowed 3.7 billion. Oh, I'm sorry. They used your money that you invested in Blackstone. Your ETF might have. Maybe not you. Your 401k might have. Your pension fund might have. But they just used 3.7 billion to buy apartments, and then you're wondering why apartment prices went up? This is why apartment prices go up, ladies and gentlemen, because they're owned by these corporate entities. So, I'm going to end this now, and I'm going to come back with a part 2 because we got a lot more to talk about so you can get your mind right, so you'll understand why this is the most important time coming up where you're going to actually have to get into the housing market, even though it's a liability. And the reason why I'm going to say that is simply because there's a situation where this could be the last time that's going to be affordable for the middle class. Jobs that are here now may not be here later. So if you're getting paid a very well or decent wage, that might not be around in 5 years or 10 years because things are going to get more technology is going to come into play where they're going to be able to use more robots instead of humans. So you're going to have to figure out a different way to make money. And by the way, I'm going to have it something down below. There's going to be a link down for cash flow NFT. This is passive income from a one-time investment. There's no monthly nothing. There are stores. They're in Europe. It is crypto based, but it's backed by real world stores with license and regulations. It's called Miracle Cash and more. The link is down below. Some of you might say, hey, I can't do it, but we made a way for it because we have an SSN lifestyle that has a ring of fire business opportunity for as low as 250. You can get in. That's your contribution. So there's several things that we can do here, ladies and gentlemen. Now, before I wrap this up, I just wanted to make you think about that because that was a long 20 some minutes that I was on screen and it went by so fast. That's why I have to do a part 2. Now, I hope you understand what I was saying here. If you don't, you can ask questions down below. And some of you might still be saying, Eric, these hedge funds and all these guys, they're still going to be buying up homes. Okay. They don't have enough money, ladies and gentlemen. And if they try to leverage themselves, they're going to put themselves in more peril. That's how simple this is going to go down. So let the shark fest for buying homes in 2023 continue. 9 months from now, get your duffel bag of cash ready. Go for your dream home. Set it up on your calendar, whether it's Zillow, whether it's Redfin. It doesn't matter. Put your saves in so then you know what the prices used to be. You can track some of the stuff will be sold. Then you can find out how far down the prices are between now and next summer. All right. And then the next year, you'll already have it tracked. So you don't have to guess. You'll say, hey, that house was $750,000. Now it's $400,000. I like my odds at that price point. Right. Just think about it. 375, I like my odds at that price point. If it gets anywhere near that price point, 450 and under, that's like a 40 to 50% drop. We put you in position to win here, ladies and gentlemen, because ultimately they have to reduce their interest rates, meaning the federal fund, they're going to reduce the interest rates, which brings up buying frenzy, and especially once they get under 5%. They will, because they need their boys to continue to win, because their boys can't win with higher interest rates. So, because as each year goes by, remember they have a clock ticking on that interest only note. All right? So, just keep that in mind. They're sitting there like, wait, if 2 or 3 years go by, that means we might only have 5 to 6 years left on that interest only at 10 years. That means our recoup. And one other last little bit about when people own homes. When these hedge funds and they do all this crazy stuff and want to buy single family homes, let them. The reason why, a home that sits empty, somebody, let me know down below if you've had a home sit empty for 6, 7, 8 months and find out somebody done smashed the windows. Find out You live in an HOA and they're calling you up saying, hey, what about your lawn? What about those hedges? What about this? Think about it, ladies and gentlemen. Somebody has to do upkeep. Upkeep costs money while it's sitting there vacant. When home prices come down and interest rates also come down, people will buy homes and they won't be buying theirs and they won't be renting theirs because now they have them up for rent. People won't be renting because in part two, I'll show you it's still cheaper to buy a home than it is from their rental prices. That's right. Stay tuned. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, and just stay with us. Come along for the ride. We're going to keep you on course because we're going to win at the end. And with all that said, keep your head up. Keep moving. And I'm out.